Here with more is Amrita Sen, and Barclays Capital Commodities analyst. She just put out a report on Libya this morning. She joins us live from London. Amrita, I know you've been poring over all this data through the weekend. Gaddafi's son says $200 billion worth of energy projects are at stake here. How much of a risk is this disruption?
No, it is not it's not a disruption that should be underestimated. Absolutely not. You are already getting reports that the smaller companies, or just generally a lot of the international oil companies, are pulling out their staff. They're slowly shutting in some production. At the moment, the cumulative loss in production, obviously it's unclear because of the data. But just now there are reports that all the ports are closed down, all the gas exports from Libya are closed down. So of course there is disruption. But I think longer term, that's exactly what's important. What Gaddafi's son said is the investment, because foreign investment has been absolutely key in North Africa, Algeria, Libya, and other countries in shoring up their production, because these countries really struggled with high decline rates. The IOCs brought in new technology, and they had really started improving with very ambitious plans in the future. Okay, Libya wasn't going to be a huge game changer in the future, but say if it were to add about 500,000 to 1 million barrels per day over the next 5 years, that's increasingly looking unlikely. And in a world where demand's growing so strongly, where China grows alone by 1 million barrels per day, at the margin, this can have a huge impact on the market in the longer term.
And some of those companies you mentioned there, BASF, you've got Shell, other companies looking to at least halt production and take out their employees at this moment. But you are actually more concerned about what's happening in Bahrain than you are in Libya. Explain why the power balance is at risk here.
I think Libya is a red herring for the market. As in, don't get me wrong, production and, like I said, the investment profile is very important. But Bahrain is not getting its due, to be honest, because obviously from an oil perspective, Bahrain is not a big oil and gas producer. But what is important to understand for Bahrain is its strategic importance for Saudi Arabia. And Saudi Arabia is the most important factor in the oil market. Bahrain's ties with Saudi is very similar in the sense that their population structure is very, very similar to the eastern provinces of Saudi Arabia, which is the oil-rich part of the country. And the Saudis definitely want to resolve the issue, what's going on in Bahrain, rather than focusing on anything else. So the oil market is not Saudi Arabia's focus at the moment. It's very much Bahrain. So we could definitely see prices go up quite a bit more if the situation worsens before the key producers even come out and say anything about controlling the price, because that's not what they are even looking at.
Well, Ali Al-Naimi, the oil minister in Saudi Arabia, says that OPEC is able to step in if there is supply disruption from Libya. What are you forecasting in terms of pricing?
I think absolutely on paper, OPEC can increase production. Current spare capacity is about 4.5 million barrels per day. Libya is about 1.5. Absolutely, that's fine. But I think there's a difference between replacing barrel for barrel. Forget quality issues. The quality that Saudi Arabia produces is not the same as Libya and all those dislocations. All of that aside, it's not that straightforward because, one, like I said, Saudis are not focusing on the oil market. Secondly, Saudi-US relationships have actually been very strained post-Mubarak. The way the US didn't support Mubarak didn't go down very well in Saudi Arabia. So at this point in time, they are less likely to control that upside in prices through increased production than they would have in the past.
For people who watch the markets, they often seem that the markets amplify or over-anticipate concerns. Contagion's been a worry since Tunisia first boiled up with unrest. Explain to me how Algeria, Angola, Morocco, Yemen, some of the other countries you're looking at right now are matters for real concern, or perhaps we're over-anticipating contagion.
No, I think, see, at the end of the day, this will only become clear in the rearview mirror in a few months or maybe a few years down the line. But I think you're absolutely right in saying to focus on every single country, exactly like we put out in the report today. Because, see, Algeria and Libya together, they combine produce about 3.5 million barrels per day. So that is very high. But a lot of these countries have a lot of key transit routes. It's not just about production. And at the moment, it's a domino effect. From Tunisia, it's been Egypt, and then Libya, and it's continuing.
All right. Amrita Sen, thank you for joining us.